The accrued interest feature of CenterPoint allows you to have the system record your accrued interest liability on a monthly basis without you having to manually make journal entries for it. Using the accrued interest feature requires some setup on your liability account. To demonstrate this, we're going to go through an example of actually purchasing a new building with a loan. We're going to do that by going ahead and going to a general journal entry. Okay, and we are going to go ahead and we're going to first create the new building that we're purchasing. So I'm going to right click here and create a new fixed asset item. And this is going to be our Summit County store. And it is going to be under the asset of buildings and my depreciation expense. I'm going to put in here as depreciation and then accumulated depreciation. The asset detail is that it was purchased. We're going to purchase this on 06/30 of 2019. And the original cost of the building is $450,000. Okay. So we're going to go ahead then and save that. And we're going to debit that by the $450,000. Okay, the other part of our journal entry then will create the loan. So I'm going to go ahead and I'm going to click new here to create a new liability. I don't know what the account number should be yet, so I'm going to come back later and assign the account number. This is going to be our Summit County store loan. It's going to be a liability, and it is actually a liability that is for long-term debt. Okay, on the detail tab, when you're setting up a liability is where you need to enter in the information that will allow you to calculate accrued interest on this loan. So you could identify who the lender is. So I could come in here and I could say that Alpine Credit is the lender for this particular loan. And in order to accrue interest on the loan, we actually have to post that accrued interest to a liability account on your chart of accounts there. And we need to have an accrued interest liability account for every loan that you have. So each loan requires its own accrued interest liability account. The easiest way to create that account is by going ahead and clicking new here. And it's going to create an account by the same name as the loan that you set up with accrued interest at the end of it. And it's going to put it in the liability account category of accrued interest. So I could just go ahead and click save on that and it'll create that liability. For accrued interest as well, you also need to have an accrued interest expense account. So you need to have an expense account set up in the interest expense category under other expenses called accrued interest. So you need to create an account there. Okay, again, that needs to be under other expenses in one of the interest expense categories. Now this next line for current portion of long-term liability has to do with another feature of CenterPoint, so I'm going to skip that for right now. The interest type that you're going to select what kind of interest type you have, whether it's equal principal payments or equal total payments. How many payments per year? We're only going to make one payment per year on this loan, and it's going to be a 4.9% interest rate. The loan origination date was 6/30 of 2019, and the completion date is going to be 6/30 of 2039. Okay, so that is all I need for going ahead and accruing the interest on this loan. I'm going to go ahead and save that, and then I'm going to select that liability and then put the difference in on that line as a credit. So we're going to credit that liability. So now that I have the liability established, each month that goes by is going to accrue interest on that loan. So I need to run a process in order to accrue that interest. And we're going to do that on our processes menu underneath processes and periodic. and we're going to go to accrued interest. From here, we're going to go ahead and click the Create New. And what you're going to do is at the beginning of each month, so starting with, in this particular loan, starting with July 0701, we always recommend that you create your accrued interest transaction at the beginning of the month. That way, if you have any payments on interest during the month, it'll zero back out that accrued interest. You're going to go ahead and you can assign a transaction number to it. So it does have an accrued interest transaction sequence. So if you make the first one 1, the next one will be 2, and so on. There's a place to put in a memo line 1 and memo line 2 on this transaction, and a place for a notation. We can go ahead and click OK on it. And you see here that it's taking the Summit County Store loan and it is taking and posting an accrued interest transaction. So it's going to debit the accrued interest expense account, and it's going to credit the Summit County Store loan accrued interest liability. So it's going to increase that liability by $1,837.50, which was based off of the terms of the loan that we entered in when we set up the loan. So all I have to do is go ahead and click Post on it. Now, at any time, if you find that you didn't have the details of a loan set up and you needed to rerun the accrued interest, you do have the ability to come down here and click Recalculate on that month. And it'll ask you if you want to do one of two things. You could either reverse out all the previous entries and recalculate accrued interest for this company in this period, or you can add an additional transaction for any interest not previously calculated. So it's really a matter, do you want it all in one transaction, or do you mind having separate transactions, one for the original amounts that got accrued and one for any amounts that had not been set up properly at the time you ran the accrued interest? Okay, so you get to choose one of those options. If you ever wanted to take a look at these transactions, you could come back in here and highlight a transaction and click Review, and it would allow you then to see the journal entries that were actually posted. You can also delete a previously entered in transaction. So instead of going to the Recalculate and having it reverse out a transaction, you could actually just delete it yourself and then rerun the accrued interest if needed. That is the accrued interest transactions. Thank you.